Your market news now. Budget fashion and homeware retailer Mr. Price reported a 9.9% rise in third quarter sales, helped by a strong December trade and growth from acquisitions. Sasol reported lower output at its coal mining division in the October to December quarter, citing safety-related incidences, tough geological conditions and delays in sourcing spares for maintenance. Meanwhile, markets are looking forward to the fourth quarter US GDP report that could reinforce expectations that the Federal Reserve will start cutting interest rates sometime in the first half of this year. To give us more perspective on the markets, we are joined by Thato Mashego, who's a portfolio manager at Sanlam Private Wealth. Thato, thank you so much for your time. Looking at your screens and the dynamics playing out there, what's driving markets right now?
Good afternoon, Anastasia. I think two of the factors which came out late yesterday that had a positive impact on markets, of course, would be the Chinese stimulus as well as the inflation print in South Africa. Now, on the former, I think the positive aspect is that the reserve requirement ratio has been reduced by 50 basis points, which frees up roughly around $130 billion on bank balance sheets, which of course can be lent out, and we could see further credit extension. Consumers' demand is quite weak and sentiment is weak in China, so some of that capital may find its way into infrastructure and business loans. So that could be a benefit, for instance, for our resources sector, as one example. And of course, the inflation print yesterday coming in slightly better than expected at 5.1, so lower than the November print, and more importantly, core inflation at 4.5%, closer to the midpoint of where we would like to see headline inflation going forward. So that's obviously quite positive in terms of the long-term rate outlook in South Africa.
I made mention in my intro that Mr. Price released their trading update, that share price up 7.7%. What did you make of their trading performance in this period?
I think it was a very strong performance from Mr. Price, not only from a growth perspective, also from a margin perspective. So they did announce that for the third quarter ending December, same-store sales was up 4%. And if we look at just the month of December, same-store sales were up 8%. So very strong trading seen over the Christmas period for Mr. Price. The major division being the apparel division saw sales up close to 12%. And they did mention that they're seeing very positive trading on their Mr. Price Kids concept. They now have 30 stores under this concept and probably going to see very strong growth going forward. And all of this occurred whilst having positive GP margin expansion, as well as market share gains. They mentioned overall they gained around 130 basis points over the quarter from the overall market. So very strong performance. They mentioned that all of their stores are now kitted out with backup power solutions. So this obviously means lower downside from a trading perspective and higher trading densities, as well as internal inflation only coming in around 5%. So this implies that there were fewer markdowns, and this would have led to higher GP margins. So very strong trading overall from Mr. Price, and no surprise that the share has responded positively as a result.
We also got a production update from Sasol. We're expecting their results on February 26. That share price up 2.9%. Your overall assessment of Sasol?
Well, I think it has been quite a rough period for Sasol. The share price is down about 10% year to date and around 50% over the past year. And there's been a number of factors that have played into this. One has been certain production hiccups, which we've seen in various aspects of the business, from Lake Charles to Secunda to Qatar and the Onyx business. So we've seen various safety stoppages as well well as inefficiencies in production. And this has obviously led to lower volume throughput. But more importantly, I think two of the major overhangs on the business have been on one hand, carbon emissions and potential liabilities from penalties as a result of that, as well as the weakness in the chemicals market generally. Now, on the former issue, we do know that there will be new regulations coming into force in April 2025, and this would lead to Sasol incurring significant penalties vis-a-vis its CO2 emissions. It is one of the largest emitters globally, and so obviously management is engaging with the regulators and with the relevant ministries to try and look at how these emissions are being measured to try and make it, I suppose, more favorable for Sasol. They're also investing in renewables so that a lot of their boilers are not using as much coal as they currently are. So that would be an ongoing project. But obviously, any potential outcome there does lead to significant I suppose, difference in how the share would be valued. I mean, consensus earnings, just to give you an indication, consensus earnings for 2024 coming at around 50 rands, the share price is around 170 rands, so just over 3 times forward earnings multiple, which is not demanding at all. But when one considers the current state of the chemicals market, you've had significant capacity coming online in the past 5 years from East Asia, from Chinese chemicals producers. A lot of them are marginal producers, and Sasol is in a favorable position from a cost perspective with Lake Charles, but unfortunately that doesn't help in terms of ethylene and plastics prices. So overall it's just not good. And of course the oil price as well has come down significantly over the past year. So almost everything that could have gone wrong has gone wrong with Sasol, and it is kind of shown in the current rating. And it's up to investors to decide how things may pan out going forward.
Tato, unfortunately, we have run out of time, but thank you so much for joining us. That is Tato Mashego, who is a portfolio manager at Sanlam Private Wealth. And just to mention, we will have the Sasol CEO on February 26 unpacking the results for the period. We're going to take a quick break, and when we come back, we'll have more news for you, so stay tuned.